welcome to the video. I'm here to tell you about a brand new product that we have been working really hard on for the past few months here at Astranti. And I think it's going to be a really great product for you in preparing you for your exam. Okay, so allow me to introduce to you Astranti's F2 objective test video series. So what is a objective test video? Well, basically it's going to be a set, or it is a set of 100 exam style questions that we've produced at Astranti. And what we've done is we've made a 5 to 10 minute long video for every single question, for all 100 questions, explaining exactly how to answer the question. Okay, so it's a full debrief. We go through the particular syllabus reference, so how it relates the question specifically to the syllabus, the indicative syllabus content that it is covering, and then we talk about exactly how to answer the question, so how to apply the knowledge that you have learnt in your studies to actually answering exam questions. We give you tips and advice, approaches for answering questions, and the different types of questions that you might get and the different approaches you may need to take to that. So, as I say, it's 100 questions for the entire set, and it's broken down into chapters. So you can use this alongside the study text or the tuition videos because the chapters are consistent across all the different products. Okay, and as I've already mentioned, it's based on the representative task statement. So when you're studying for this exam, all of the content that we provide is based on the CIMA syllabus. And we're just showing you and assuring you that every single question that we look at relates directly to the CIMA syllabus and in some way helps you in preparing that aspect of the syllabus and ultimately preparing for your exam. Okay, so just before we go on to have a look at a sample of what these videos look like, I'm just going to give you 3 of my top tips for approaching this F2 exam. So in my experience, and I've been dealing and working in F2 for many years now, the main thing that students need to get their head around is this step up from the operational level, and in particular F1. So with F1, you're certainly performing calculations, you're doing your accounting properly, your double entries, etc. But generally you're performing calculations, and that's information you're providing to someone else, perhaps your manager or whatever. Now at this level, now you're at the management level, you're the one that is receiving sometimes calculations from others, or perhaps you're even doing calculations yourself, but you need to understand what that information means. You need to be able to understand ratios and what certain bits of information mean, because that is now your job at this level. So there's an extra level here in analysing information that's being presented, and that comes up in certain topics in this exam. Okay, another top tip is that, of course, this exam is still financial reporting, so it's absolutely essential that you know your double entry, you know your dead click, your debits from your credits, you know what accounts you're making entries in to deal with certain transactions, and of course you are applying the provisions of relevant international financial reporting standards. Okay, this is a major part of the exam, and most of the questions will focus on these aspects. Okay, not all of them, of course there's other parts to the syllabus, but this is a major part of it. And of course, finally then, there are going to be lots of calculations in this exam. As I said, this is advanced financial reporting. You will need to make calculations, and it's not just financial reporting calculations. Obviously you are putting together financial statements still, but some of the topics in F2, the cost of capital calculations and looking at capital structure and calculating or performing calculations using formulas in that area. There's lots of calculations in that area. You need to know how to do those. Group accounts, again, a new topic in F2, performing the or producing consolidated financial statements and the complexities that throws into the mix. Ratio analysis, okay, and that relates to the earlier point about analysing information. So you have to, of course, do a calculation to do a ratio analysis. Perhaps you're looking at something like liquidity, but then you have to go on and analyse what it means if the company's liquidity is perhaps poor and what they need to do to improve on that position. And then, of course, financial reporting, applying the provisions of various reporting standards, making sure you understand how to do that in practice. Okay, so let's take a look at a sample of what this new product looks like. Okay, so here is a sample question. This is what the videos will look like. And just to quickly break down what you can see. So on the screen, you can see at the top in the blue, we have the syllabus reference. We have the question here. Okay, this text, and then the solutions will be putting one of these into the blanks in this particular question. This is what we call a drag and drop style question. So in the actual question banks in our mock exams, you'd be able to drag these into the place. But for the purpose of this video, we can just fill in these blanks, can't we? So the structure of these videos will usually run something like this. So first of all, we'll deal with the syllabus reference and the topic. So in the actual exam, you won't get the syllabus reference at the top. Obviously, you just get the question. But for the sake of these videos, we quickly run through the syllabus reference to show you exactly what part of the syllabus that a question relates to. So in this case, if we read the syllabus reference, we can see that it is to eliminate intragroup transactions, balances, and unrealized profit on the transfer of inventory. Okay, so we're dealing with group accounts and consolidations because we've got intragroup transactions that have arisen due to the transfer of inventory between a parent and a subsidiary. So once we've looked at the syllabus reference, we know what topic we're dealing with. It's typically a good idea, and this is what we tend to do, to jump ahead, skip the body of the text and go down to the requirement, because looking at the requirement first gives you the context to understand what the question is asking you, and then you can go straight into the body of the text and just pick out the key information that you need. So if we look at the requirement in this case, in respect of this transaction, what adjustment, okay, so we're looking for an accounting adjustment that needs to be made to the consolidated statement of financial position. So that tells us what statement we're working in for SIP for the financial year ending the 31st of the 5th X6. So we're given a financial period that we're working with it. So we know, looking at the options, we're looking for an adjustment, and that adjustment is going to be to consolidated retained earnings, consolidated plant and equipment. So what we need to do is figure out whether we're making a debit or credit entry. Okay, so relating back to that key point that we are still dealing with financial reporting, you not only need to perform calculations, as we will have to do in this case because numbers are involved, but you need to know your debits and your credits. Okay, so we're looking for the correct entries in these accounts. We also need to find the correct amounts. And as we know, we're dealing with intragroup transactions relating to the transfer of inventory. So if we just scroll down a bit, we don't need that syllabus reference anymore. Let's take a look at the question and make some notes. So on the 1st of the 6th X5, always important to highlight dates, SIP sold a machine to its wholly owned subsidiary for $35,000. Okay, so we've got intragroup trade going on here. And obviously with intragroup transactions, we have to be careful to not do any double counting, because when you're talking about group accounts, you are presenting the two entities, the parent and a subsidiary, as a single entity. So any transactions that happen between members of that group need to be dealt with and adjustments need to be made, because profits, if we're talking about profits and making a profit on those transfers, we cannot show those in the group accounts because it will be double counting. So the machine was originally purchased on the 1st of the 6th X3 for $36,000 and had a useful life of 12 years. When it was sold to the subsidiary, its remaining useful life did not change. Okay. The group policy is to depreciate non-current assets on a straight line basis. So that's all the information we need to figure this question out now. So what we're doing effectively is sort of an unrealized profit adjustment, because the parent has sold a machine to its subsidiary at a markup, but we can't include that markup in the group accounts. So what we need to do then is set up a little table. So let's look at the dates first. So this is the date of sale in X5, but it was originally purchased in X3. So that's where we're going to start. So we want the 1st of the 6th X3. And at that point, the parent, I know they're called SIP, but let's call them the parent. We have the parent and we have the subsidiary. And on that date, the parent purchased the machine for how much? $36,000. Okay, and at this point, they don't own the subsidiary, so we don't have to worry about the subsidiary just yet. So what happens to non-current assets? Well, each year they are depreciated. We're using the straight line basis. So let's just do a little calculation, because what we are trying to find is the carrying value of this asset 1 year later in X4. We'll do the same for X5, and then for X, sorry, that should be a 0, X6 as well, because that's the date, that's the end of the financial year that we're looking for. So we want to see how the value of this asset has changed due to depreciation over these 4 years. So we need to start by finding the depreciation, don't we? So let's calculate depreciation for P. We know that P is using a straight line. The group policy, well, the whole group uses straight line. Straight line depreciation is calculated by taking the historic cost of the asset, which we know is $36,000. Less residual value. There's no residual value mentioned in this case, so we just divide it by its useful life, in this case 12 years. The depreciation charge for P for each of these years is going to be 36,000 divided by 12. It's $3,000. So each year we're going to deduct $3,000 from this until we get to the bottom. So between year 1 and year 2, we're deducting $3,000. So we're going to have 33,000. We can follow this all the way through. So we deduct another 3,000, we'll get 30. And then finally we'd have 27,000 at the end, the period that we're looking for. We do a similar thing with S, but of course we need to account for the value of the asset at transfer and when that was. So the asset is transferred on the 1st of the 6th X5. So at this point here, we have the transfer, and it's transferred for $35,000. So at this point, we want to put in here $35,000. That's the value at which, sorry, that should be a 5. It looks like a 6. So value at which S is carrying this non-current asset. And so if we want to calculate the depreciation that S is going to pay, it's going to be 35,000, which is how much they paid for it, the historic cost, no residual value, divided by the remaining useful life. What's the remaining useful life? Well, it was 12 when it was first purchased by P in X3. It is now X5, and we've had 2 years of depreciation. So of the 12 years in total, 2 of them are gone, which mean 10 are left. So the depreciation for S is $35,000 divided by 10 remaining years of useful life. That's going to be an annual depreciation charge of $3,500. So again, we're going to deduct $3,500 from this here to find out the carrying value of the asset in S's books at this date. And that's going to be $35,000 less $3,500. It's going to give us $31,500. So here's the problem now. We've got the same asset, but it's been recorded at 2 different amounts, or it would have been recorded at 2 different amounts in these 2 different companies. It's at this point the asset is transferred from P to S. But because P and S are both in the same group, obviously the gain that was made here, they sold the asset for $5,000 more than it was recorded at. We can't include that in the financial statements, in the group accounts. So what we need to look at is the difference between these 2 amounts. So what it would have been carried at with and without transfer. And we find the difference here is that the asset has been overstated by $4,500. Okay, so that takes into account the gain that P will have made on transfer, but also the extra year of depreciation. So the asset's overstated by $4,500, which means we know what entries we need to make, don't we? So we're going to make a debit entry and a credit entry. If we're saying that assets have been overstated, then we need to reduce the value of those assets. So first of all, credit to PPE. What's the debit entry going to be? Well, because we're dealing with group accounts, it's going to be a debit entry to retained earnings. So that's going to be the answer. So in here, we're going to have debit retained earnings, credit consolidated plant and equipment. That's those two dealt with. And the amount is £4,500. Dollars, not pounds. Okay, and so that's how you would answer a question like this in the exam. Okay, so there we are. That is the Astranti F2 objective test video series. And for F2, we've got 24 chapters. Okay, so that's 100 questions spread over all 24 chapters. So every single part of this syllabus is being covered, and we have at least 4 questions on every single chapter. Now, the great thing for you is that if you head over to astranti.com and you sign up or you sign in, you can access the first 3 chapters of this set for free. Okay, so you haven't got to pay a penny for them. You can have a look at them, see what you think, get used to the format and how they work. And as I say, you'll get the first 3 of those 24 chapters completely for free. So if you like what you saw in that sample, then head over to the website and have a look at what we've got. So that's it for this video. We just want to make you aware of this new product. We're really pleased with how this has turned out. As I say, we've been working on this for the last few months now, and now that it's ready, we really want to get it out there for you guys to use, and more importantly, to get you passing your exams.